Everything everywhere is going up. The cost of food is going up. The cost of living is going up. Utilities, gas, and everything in between. And especially when people are looking to buy, a lot of people feel like it's become unaffordable and unattainable and something that is just only for people that make a lot of money. We here at Housify are bucking that trend. In this video today, we're going to talk about how we are saving our clients hundreds of dollars a month on mortgage payments compared to people that don't know that these programs and different offerings exist out there. So we're going to jump right in and tell you how we can save you money when buying a new home today. My name is Marti. I'm the rebate guy. Let's get right into it. All right, guys, so jumping right into this. So again, there's no silver bullet out there, right? I'm not gonna be able to find you a mortgage that's $1,000 or under a month, right? That's something that has gone away, unfortunately, with the rising tides. But I will say that, especially in the San Antonio market, right, which is where we're primarily, and then Austin's our second market as well. San Antonio specifically, we are still able to do mortgage payments on brand new construction, never before lived in homes under $2,000 a month, which is crazy. We're in 2024, January of 2024. And people hear those numbers and they say, Chris, there's no way, there's a catch, there's something you're not telling us, this is just a trick to get us to call you. And that is not true. There are things out there that we're gonna talk about in this video today that can all kind of stack up, right? You can take advantage of all of these different offerings to basically create one unbeatable deal for you to purchase a new home and not break the bank today. We're gonna jump in and learn exactly how that is right now. The first thing that you need to know is, obviously, this isn't going to work everywhere, right? This isn't going to work in every new home neighborhood that you want to live in, right? You might go on Zillow or Realtor.com and see, hey, I want to live in Stone Oak, right? Or I want to live in Bernie. Yes, okay, you're not realistically going to get too many $2,000 under mortgages in those areas, right? Those are areas that are very highly developed. The land is very expensive, and that means that the builders are having to pay a lot of money to acquire that land, so the homes are going to be, kind of pricey, right? But in areas that are being developed, so this is the west side, right? This is the west side, southwest side, right? Like south of 90, heading down like 410 and 1604. This is south 410, right? Along 37, going down towards like the Toyota plant, right? Heading down towards Lavernia and some of those areas. And then kind of coming back up 410, hitting that I-10 corridor. You got your St. Hedwig areas, your Converse areas, right? Heading out of town. And then even heading like up into New Braunfels, some of this stuff is starting to kind of pop up in our New Braunfels area for mortgages under $2,000 a month. And so again, not going to work everywhere, but area is a big piece of it, right? So we talked a lot about like where these areas are. Obviously, for specifics, reach out. I'll tell you where all the options are. We can kind of make a game plan for you of how we can help you get one of these. But let's talk about, like, now that you have an idea of like where, let's talk about like how this is happening and why this is not a gimmick, this is not a trick, and there is no hidden, but Chris, what aren't you telling me? Let's talk about mortgages, right? The first thing about a mortgage is you need to understand that mortgages are broken into four pieces, PITI: principal, interest, taxes, and insurance. That's a mortgage. Now, I didn't mention HOA dues, and I just want to put a little asterisk there. HOA dues are separate. They are not included by the mortgage. They are something that you make a payment to outside of your monthly mortgage payment, and they're not rolled in. So that's something separate. So a mortgage is the four things that we just talked about. And let's talk about exactly what each of those means. Starting with the first P, principal. Principal is the predetermined amount of the principal payment. So again, the total loan balance that you have that is part of your payment every single month. So specifically, the principal, on an example, would say, hey, if you have a $200,000 mortgage, right? Like that's the amount that you got loaned by the bank, and you're paying that over 30 years, your principal payment might be $200 to $250 a month total to start, right? So you pay for a year and your principal balance has only gone down from like $200,000 to $197,400, right? Not much. Again, it's designed because mortgages are interest front loaded. Lenders know that you're probably not going to keep your mortgage for 30 years. And so they make it to where your early payments on those first couple of years are primarily interest payments, and you're only paying a little bit of principal every single month. That's why there's also a lot of hacks out there in different videos about how you can save money, a lot of money, and lob years off your mortgages by making extra principal payments every single month. So that's principal. The next word is interest. We talked about that. So that's your interest payment. That's the, depending on what rate you closed at and things like that, that's the second part of your payment. Those are usually the larger numbers, right? Where you're paying, $400, $500, $600, $700 or more dollars a month, depending on your loan amount for your mortgage payment, right? And that's where, again, you've got a large part of the payment is the interest portion. And then it starts to invert on the amortization scale. If you look at it up, it shows you the breakdown of every payment you'll make from year 1 through year 30 if you're doing a 30 year. You'll see that eventually it'll invert to where interest will go down and your principal payment will go up. It'll start to outweigh, right? But your PI is always fixed, right? Your principal and interest portion is always fixed on your loan. So that's not going to change unless you get an ARM or something like that. But if you're getting a fixed mortgage, that's not changing. So then the T is taxes, right? Taxes is one of the big things that we're going to talk about in this video. Interest as well. We're going to talk about how we can help you save money on interest, but taxes is one of the big reasons how we're going to help you get under that $200,000 a month payment. The T, taxes, is again the monthly payment that you're making to the county and the city of where your home sits, right? The school districts and all of that goes into your tax payment, and they're collecting on that every single month in your escrow account, and then it gets paid at the end of the year to the county or the city, your taxing jurisdiction as they call it, right? And then the last one that they call, the last I, is insurance, right? Insurance, just like anything else, car insurance, health insurance, there's homeowners insurance, and that is making sure that the note holder, right, the lien holder, who is not really you, it's the bank, right? It's the lender. They're making sure that their investment is protected by forcing that insurance to be paid, right? They're forcing the collection of that insurance to make sure that their asset, their property that they're lending money on is protected, gosh forbid, in case of an emergency, a fire, or something serious like that. It is taken care of, right? So those are the 4 things that go into a payment, and we're going to talk about how to hack the back 3. We can't really hack principal too much, but we're going to hack interest, taxes, and insurance to get you under $2,000 a month in 2024. So a lot of people think about price, right? We talked about how we're not going to hack principal too much, and people think about price and they say home prices are crazy and it's unaffordable and who would pay that much for a home? And what I tell our clients is, look, at the end of the day, right, if somebody told me that I could go and buy a mansion, a $5 million mansion today, right, way outside of my budget, but if they said, hey, Chris, you can go do it, and your monthly mortgage is only going to be $2,800 a month, right? Okay, what's the catch, right? Like, as long as I can make the down payment, and if that's really only my payment, right? Sure, right? I'll go ahead and do it, right? Why would I not want to live in the $5 million mansion if I'm only having to pay $2,800 a month with no hidden strings or catches, right? And so it's the same thing with today with home prices, where you're like, yes, home prices have gone up. It's uncomfortable. But barring some crazy worldwide global depression, they're not going to have a big crash, right? You'll have different dips and different things. We just went through a dip in 2023. But again, like without a major problem, they're not really going down. So if you're playing the waiting game there, it's kind of crazy. And what I tell people is, hey, if the price doesn't matter, what does matter? And to most households, it's, well, what's the monthly payment, right? What's the monthly payment that I'm paying every month? And of course, the value, right? Is a house, do I feel like I'm getting enough house or the value for the house for what I'm paying every single month? So with that being said, I tell people, okay, great. Like, we'll save you as much as we can on the price, right? We'll look for good deals. We'll look for what the builders are offering. Maybe there's homes on sale where they have discounts. We're going to do what we can on the price, right? But the back 3 is what I really want to talk to you about today. So jumping right in, the first hack that we're going to learn about is the first I, interest, right? From the PITI. So the interest hack. As of right now when this video is filmed, which is January of 2024, rates are averaging between 6 to 6.5% for what they're calling the par rate. I don't want to go too much into par rates. I don't want this to be a big lending video, but it's basically the rate that you don't have to pay a lot of money for, right? It's essentially the free rate. And depending on your credit score, some people's par rates are actually like even high 6s in the 7s still today, right? If your score is not as high as it needs to be. So the hack, right, is that new home construction basically found a way, right, to essentially throw a bunch of money, their money, not yours, on their side at the investors that issue these rates, and they basically are buying rates, blocks of money, blocks of interest rates, way below market value in 2024. So that's hack number 1. Interest rates way below market value in 2024. For example, and again, disclaimer, everything I'm about to say is current today, but it's probably going to be different by the time that you see this video, so you'll have to check what the currents are. But like I said, rates 6 to 7% right now on the market. D.R. Horton, one of the largest builders in our area, San Antonio, is offering a fixed rate today of 4.5%. So if I'm telling a client, hey, you can go buy this pre-owned home, and they're getting a 6.5% interest rate today, or they can go to D.R. Horton and get a 4.5%, that's hundreds of dollars, legitimately $200, $300, $400 a month, that just got lobbed off right then and there because of that hack, right? They are buying rates below market value. They're fixed rates. They're paying for them, not you. and you're able to get one of those, and that's it. Once you close, it's yours. And 4.5 is an incredible rate, right? It's going to be real hard to refinance out of that rate for a lot of the people that are closing right now, because again, the rates would have to dip very, very low for people to get back into the 3s. So that's hack number 1, is interest rates, below market interest rates. Hack number 2, taxes. Talked a lot about taxes, right? And tax rates are different wildly by distance, right? Like, and what I mean by that is that, like, you could be in one neighborhood paying a 2.8% tax rate, and then you go across the highway and you're paying 1.6, right? And all of that has to do with like lines, right? These invisible lines, the city lines, the county lines, different like jurisdictions. Like if you're in an area that has like a MUD, which is a municipal utility district, a PID, a public improvement district, all these different fancy terms to basically say that there are all sorts of stuff that they can put on your piece of property, right? The taxing jurisdiction change wildly the percentage that you pay. So we'll break out the phone and we'll do an example, right? Let's say that you had a home that was assessed at $250,000 in San Antonio. If you're paying 2.8%, which is the inner city tax for a lot of the San Antonio areas, like inner city San Antonio, that's $7,000 a year in property taxes that you're paying before exemptions. We'll talk about exemptions as well, at that 2.8. But if somebody were to go out to, let's say, New Braunfels right now, one of the neighborhoods that we just sold a home in, where the tax rate is 1.6%, that same exact person is only paying $4,000 a year in property taxes compared to the $7,000 a year for somebody that's living, again, inner city San Antonio. And of course, when we break that down, you divide your $3,000 a month by 12, right? $250 a month difference that you have compared again to somebody that is living in a lower tax rate. So if we just learn that you could save hundreds of dollars a month on the interest rate, now you're adding another $250 a month in savings on the tax rate. Now you're over $500-$600 a month difference from somebody who bought a pre-owned home in an area where the tax rate was high right now in this market to somebody that's buying a new construction home in the county where the tax rate is low. And of course, yes, like county may not always be the county forever. People get annexed in and things like that. Usually that process takes quite a while. And you'll know like when they're starting it, right? Like if you go to an area and the talks of annexation are already happening, like you would be aware of that. And so you would kind of know, hey, my payment could be going up. And so exemptions, we'll talk briefly about exemptions because exemptions do apply anywhere. So the savings from exemptions do apply even in the 2.8 area, the same one that they do in the 1.6. But exemptions are something in Texas where you as a homeowner can basically qualify for different things, right? Military, if you have a disability rating, there's different percentages of that with some tax savings. Owners, primary owner occupants, the home that is your homestead, as they call it, your primary residence, that qualifies for a big deduction that actually this year, 2024, just increased in Texas from $40,000 to $100,000. That's a big deduction. You also get different school district deductions, like Comal County right now is offering a 20% school district deduction for their homestead exemption because their district has a surplus of funds right now. And then there's also one for age, right? Over 65 has an exemption in Texas. You can freeze your school taxes and save some money there. All of those exemptions are now on top of, again, the rates that we talked about earlier. So I showed you that scenario where that person in the county, the 1.6, is paying $4,000 a year. Well, let's redo that math. With the new homestead exemption in Texas, they wouldn't be paying 1.6% on $250,000. They'd be paying 1.6% on $150,000 because the homestead exemption this year just got increased to $100,000. So now when you do that 1.6% again, that tax bill, even in the county, has decreased from $4,000 to $2,400. And that $1,600 a month savings is another $133 a month of savings on top of the $250 that we just learned about going from the 2.8 tax rate to the 1.6. So now you're talking about $380 a month of savings in taxes, right? And so again, combining that with our interest rate hack and now our tax hack, we're well over $700 a month of savings from where a lender started, right? To like a high price to this low price, right? And the last one is insurance. So insurance is something that, again, we talked about it, protects the investment of the lien holder, right? The bank or the lender that has your loan. What's the hack here, right? Chris, I need insurance. How are we gonna hack it? Not so much a hack, but just a cost savings. And so with the way the weather's been recently across America, right? whatever you believe. There have been storms, and insurance companies have just been eating it, honestly, globally, right? Insurance companies have been losing a lot of money between fires, flooding, storms, things like that, right? And so now you're seeing rates that have significantly increased, right? A lot of insurers are refusing to insure homes with roofs that are more than 10 years old, show any type of damage, right? They're making you pay 2% deductibles, which 2% deductibles on big job is very, very pricey, right? And a lot of changes that have happened in the insurance industry. There are a lot of markets where insurance companies are pulling out of, right? Because the homes are just too volatile. And so the third hack here with that second I, the insurance hack, is that when you buy new home construction, because the product's new, because it's warranted, it's built to today's code, right? It's built in areas where they have strict flood and grading and drainage requirements and things like that. The insurance companies are still giving people a break on policies that are written for new home construction, where a policy on a pre-owned home might be $1,500 to $2,000 in the San Antonio area. People are closing all the time right now on these homes we're talking about under $250,000 price points, under $300,000 price points, with insurance policies well under $1,000 a year, right? So that means, again, you're saving up to $100 a month on insurance buying a new construction home compared to a pre-owned home. So we broke that down, right? That's the hack, right? Those are your 3 hacks right there. And that's how it works, right? So there's no magic wand, there's no secret button, there's no cheat code. It's that we are helping our clients take advantage of the 3 things we just talked about: the interest rate hack, the tax hack, and the insurance hack, adding all of that together to basically say, hey, we can take you to this neighborhood with this builder to buy a home here, and you will pay $700, $800, $900 a month less than a home somewhere else in another area. And that's how we're helping our clients hit price points under $2,000 a month for owner-occupant homes. So again, guys, this is something that's achievable by everybody, right? We're getting your closing costs paid by these builders, meaning that you're only having to come up with the down payment, if that. A lot of times they have different down payment assistance and other grant programs that can help you save a lot of money on this stuff, right? But again, closing costs paid, getting some discounts on the house, right? Money off the house, we talked about that. And of course, taking advantage of these 3 hacks to get you paying a mortgage all in that is way less than what a lot of people are paying for rent currently in San Antonio. So if this is you and you want help, right? No matter what you think your situation is, Chris, I don't have down payment money, my credit's not where it needs to be, I've got all this stuff. We don't care. We are going to find a solution. We are going to help you. So please reach out on the website, comment below, DM us, whatever it is. We will schedule a consultation with you where we will go through your scenario. We will find solutions to these obstacles, and we will save you a lot of money when you buy new home construction. Even if you're not trying to take advantage of this hack and you just want to buy a home somewhere else, call me. I save my clients thousands of dollars as a rebate guy here when they buy and sell homes with me. So make sure that I'm your first call before you go visit any builders anywhere or want to look at any homes. And as always, if this information was helpful for you, please comment below with any questions you might have or anything that you want to talk about, ideas that we can talk about in future videos. And as always, like and subscribe to the channel for more amazing content. And yeah, we'll catch you next time. Thanks so much for tuning in. And this has been a great video on how we're going to help you hack the market and save a lot of money on your monthly mortgage payment.